Our next guest says the stock market is a better indicator than political polls when it comes to forecasting the midterm elections. Now, that's an interesting idea. The market beats the polls when it comes to looking at politics this November. Who's with me for that? Well, I'll tell you. Let's bring in EventShares CIO Ben Phillips, sitting next to me. Ben, welcome to the program.
Thanks for having me.
You look extraordinarily young.
Well, I am. I'm in my mid-30s, but, you know, the ETF industry is young, so I come here representing that.
Nice response, young man. Nice response. What do you mean? The market predicts the November elections better than the polls do? Make your case.
Well, so we've seen policy really as a long-term leading indicator for changes to companies and industries, right? So that's really the core thesis that we founded the company on. But as far as, you know, looking at polls, we were looking at our test baskets prior to the last election, and we actually saw indicators that said that Trump was going to win the presidency. And so we were surprised by that, but we saw this was, you know, a few days before.
You saw the stock market was saying Trump's going to win.
The stock market was saying, and there was a major rotation occurring in the stock market into what we deem as Republican stocks. Those are the ones that make up the GOP fund.
So what about now? We're, what, 8-9 months away from the election. What do you think the stock market is telling us about November?
Sure. So we saw really in January, I think the start of the year is where we started to see some interesting things. So tax reform had passed. That had kind of, you know, I think had people move on to what's the next thing. And we saw the GOP fund really start to rally. It was at the same time.
Wait a second. Yeah. You have a GOP fund.
Yes.
That's an ETF which invests only in GOP-oriented companies?
That's right.
Like defense contractors?
Republican policies. Defense, it has big deregulation bucket in there. It has infrastructure. It has a tax reform bucket and the small energy bucket as well.
So you run that fund. You run that ETF. It's a GOP fund by any other name. And you saw money coming into it. And you think that is a predictor of a Republican win in November?
It was more the performance of the underlying stocks in the fund, right? So we saw, after the State of the Union address, we really saw Trump boost in the polls, right? And we saw that occur. And we saw at the same time the Republican Policies Fund really starting to see an uplift. So it saw an uplift in defense names, infrastructure names a little bit, and then the deregulation names were also big.
Since October of last year, your Republican fund is up 12%, is that correct?
12%. Yeah.
And the S&P is up 5%.
That's right.
Do you also run a Democrat fund?
We do. The ticker's DEMS, D-E-M-S.
And?
That fund is actually underperforming the market. It's right in line, but it's definitely underperforming the GOP fund. This
is fascinating. This is a direct intrusion of politics into the market, using the market as a forecaster of politics.
It's really policy. You know, I think that's where people are relating it, I think, too closely to politics. We think politics is the noise. It's really the debate and kind of the distraction for real investment ideas.
So the market likes the GOP's policies.
Likes the policies, likes defense, likes deregulation.
Ben Phillips, surprisingly good stuff from such a young man. That's ageism, by the way.
Yes.
Okay. I could be your grandfather. Ben, thank you very much indeed, sir.
Thanks for having me.